Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday the 31st of March. We've got a really interesting moves that are developing across markets. We've seen that equities have remained resilient actually in the first part of this week, as sort of been question marks surrounding how risk appetite has been flowing. Just let me show you initially these treasury yields, which sort of fell away yesterday, a little tick higher today. It'll be interesting to see if that tick higher can be maintained. But that sort of falling away of treasury yields that we saw on Friday with the selling pressure through equities, and again treasury yields lower yesterday, would suggest that equities would have been falling. Actually, Wall Street climbed into the close, and pretty strongly as well, actually strongly higher, unwound all of Friday's downside pretty much on the S&P 500 yesterday. So really interesting holding up of sentiment, and that's continued into the European session today with all the markets around about 2% or so high. You've got S&P 500 futures, another 0.8% higher today. So that's the equity side, but it's interesting that that's coming amidst the dollar, which is regaining some strength in the last couple of sessions as well. That rebound that we've seen in the dollar tends to be sort of coming as, or tends to have been coming as, the safe haven flows have been resuming. So how this this equity market rally continues will be interesting. You've got the across the forex majors, the dollar is outperforming today. The one maybe noticeable exception to that is the Australian dollar, which has certainly been helped by the fiscal support package that the Reserve, the Australian government has put together. But also, look at this. We've seen that China's PMIs have recovered to above 50. Now, bearing in mind that absolute pounding that they got in the February data, back down to 35, 52 needs to be taken with a pinch of salt, I think, on the manufacturing composite 53. So we just need to be a little bit careful that you don't read too much into that, because obviously that's a massively low base, and just to pick up effectively from a low base. But essentially it is still a stabilization, you would argue. So March's data for China better than expected, but China was obviously the first country through the coronavirus scare or economic shock, and they're starting to just get back to a little sense of normality, although obviously the restrictions are still to a certain extent in place. But it'll be interesting to see how China now performs in the coming months. Now, that has certainly helped to sustain this mild improvement in or maintaining the improvement in risk appetite. But as I said, the stronger dollar is sort of playing out today, which is dragging down gold and silver. But look at this oil price rebounding. Oil was sharply down again for a third day in a row yesterday, actually breaking below the 1945 level on WTI crude to 1927. So just repeat that. And so effectively that now means that oil yesterday hit, on a closing basis and also an intraday basis, the lowest it's been since 2002. So 18-year lows there. Little pickup today, but it'd be interesting to see if that pickup can be sustained. I've got an analysis of that on our website. So yeah, lots going on again. Now, in terms of our data points today, Eurozone HICP is at 10 o'clock, which is in a little bit. Let me show you the expectation. 10 o'clock, and expected to see inflation falling back to 0.8% on the headline and 1.1% on the core. Then into the afternoon, we've got a little bit of US data. Case-Shiller house price index actually expected to pick up to 3.2% from 2.9. And also we'll be looking out for this number here, Chicago PMI. That could be interesting. Expected to come in at 40. So could be an interesting number to watch there. US consumer confidence at 110 is the expectation there. So wow, consumer confidence falling sharply. Now, consumer confidence in the States has obviously been very strong up until very recently. Let me just show you. number. Obviously been very strong, 130, but expected to fall back to levels not seen since 2016 today. So that takes me on to my chart of the day, which is the Aussie yen. Now, a classic risk on, risk off indicator, and we can see, interestingly enough, that the Australian dollar continues to recover against the yen. Look at this run of positive candles, with the exception of this candle here on the 25th of March. The candles have been broadly positive. Little sort of shuffling around, actually. Lack of traction that we've seen in the past few sessions, though, have questioned that recovery. But the market moving out higher again today and looking to use this uptrend support of the past couple of weeks. You can see that here, sort of week and a half. See that here on the hourly chart. Now, obviously, we saw a spike to 66 big figure, which rebounded today to move and break out above that initial resistance, 66.90. So you'd argue how the market responds around the sort of 66.60 up towards, put the crosshair on 66.60, we can see again was a bit of a breakout in near term, to 66.90. How the market sort of acts around that support now, which given the fact that the uptrend is coming in around that level as well, that will be interesting, because if the market starts to break that uptrend, fall back, 66 is initially the support, but this one here, 65.50, that's the first real higher low reaction low, 65.70 you could argue as well, but really you'd want to see 66.50 intact, being as it was a breakout of a pivot line as well. Now, in terms of momentum indicators, you'd want to see the hourly RSI staying above 40 ideally for the bull run to continue, you'd argue that with the RSI just falling away, stochastics begin to fall away, this is a market still very much in the balance. But yeah, it'll be very interesting to see if the market can close higher, because, as I said, 38.2% fib is still a sort of an interesting gauge on this chart, being the sort of 38.2% fib retracement of the big sell-off, and it's been around where the market has been consolidating in the last few days. So trading away from that, you'd open 50% fib, 68 figure, but yeah, question marks around this rally. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.